I'm recording, so Heine, you're on.
Awesome. Thank you so much for tuning in. Well, we have hot on the seat today, Adam J. Moss. He's a radical results rock star. Wow. What can I say about Adam that you don't already know? Well, he's an award-winning speaker. He's a writer. He's a Guinness World Record holder. But main thing is that he teaches me so much about corporate strategy because that's what his heart beats for. But on the other hand, his heart is also very, very strongly beating for everyone who's got a struggle because he's overcome a lot of struggle in his own life, whether it was abuse or addiction. He's really a rags to riches story. And he's my very, very dear friend. I'm really pleased to be able to work with him, to be able to introduce him and really learn from him. He's got so many gold nuggets that he's going to drop today. So get your paper and pen ready because I'm telling you, the last time I was caught unawares and I was scrambling. So I'm prepared today. I'm armed today. So on that note, I'm going to hand the mic over to Adam. Adam, it's all yours.
Thank you so much, Annie, for such a wonderful introduction. As Annie said, everyone, my name is Adam J. Moss. I'm the Radical Results Rockstar. And I really coined that nickname because I develop processes and really to get radical results on a little bit of a different way than what most people do. So I discovered that the more I thought of the end in mind, so the more I thought about where I'm going to be in my future, the more I started to develop these senses and these awarenesses to how I'm developing myself along the way. So the way that really started for me is coming out of homelessness and addiction. I was put on a stage to tell my story. And stepping onto that stage, I really kept in the back of my mind, I need to plan with the end in mind. So what I did is I let out all of the skeletons in my closet. I talked about the abuse, the drug addiction, and the homelessness that I've been through. And a lot of the skeletons that were in my closet that a lot of people would keep held in there, I really let them go. And the reason I was so open and so honest about that is because I knew where I was going to be. I knew that I would find myself on the cover of magazines. I knew I would hit celebrity status. I knew that I would be the rags to riches story. And what I wanted to do was remove any ability for anybody to ever bring up anything from my past. You know, no one can ever say anything about me in terms of the media, in terms of confrontation, in terms of, you know, paparazzi, things like that. No one can say anything because I've already opened it up and left it on the table. Now, the original reason I did that was because I wanted to disempower other people to say negative things about me or bring negative things into my life. But what I actually did was empowered myself, realizing that I already had the mindset of a great leader, that I already had the mindset of a celebrity status individual. I already had all these mindsets placed into my brain, and I was telling my subconscious all the time. So I decided to take that, and I really wanted to propel myself into my greatness by having that aspect in every single part of my life. So I started in business, and what I discovered is I needed to plan with the end in mind. So I knew right away I wanted to incorporate. I wanted to be a CEO, and that to me was incredibly powerful. And the message I put in my head was just continuously, you're going to be a CEO, you're going to be a CEO. And I thought to myself, why don't I just become a CEO now? Why don't I start with the end in mind, open up a corporation, label myself as a chief executive officer, and have that designation right away? And deeper into that, I started to research and look at some of the top CEOs in the world, individuals that have come from very little to grow themselves, how individuals have been able to build themselves up and create these massive companies and keep all of their wealth. So I started to study a lot of different CEOs, and one of which was actually an individual who is now president of the United States. And while he was being brought into office, there was a lot of conversations about his taxes and that he should be showcasing them. Now, most people's initial thought is that, oh, he's doing something illegal, that's why he doesn't want to showcase it and whatnot. But I decided, you know what? I always have a very important phrase that I keep in the back of my mind, and you might want to write this one down. Actually, you 100% want to write this down, is that I would rather be positive and wrong than negative and right. That's a really powerful saying. I would rather be positive and wrong than negative and right. So I decided to look at it from a positive aspect. Why would an individual not want to showcase their wealth, to showcase what they put into the world and what they do in their business? And I realized it's because there are laws and regulations that are already in place that help the rich stay rich and help the rich get rich. And the thing is that so many of us don't know that these laws and regulations exist. We don't understand what we can do with our businesses in order to create a stronger foundation for the future. So I did my studying and my research, and I put in my 10,000 hours, and I kept pushing in order to figure out how these individuals keep their wealth. And so many things came up and so much information was there, and I was just blown away. So what I decided to do is, in this webinar, I wanted to take a lot of that heavy information, I want to condense it, and I want to make it sense to all of you. Because as Dr. Obam always says, if it makes sense, it makes dollars. And I'm all about people making dollars and getting successful and finding their wealth within their businesses. And the number one way to do that is incorporation. So in incorporating yourself, what is a corporation? Well, a corporation actually acts as a separate entity to yourself. It's an entity you own. Think about it as if it is another version of you, right? So it has its own tax codes, just like you do as an individual. It can own assets, just like you can as an individual. It can purchase assets and do business, just like you can as an individual. And it can create corporate credit, just like you can create personal credit as an individual. So these are all really important topics to understand, because what it does is it adds a level of security. So when it comes to the way that we generally do business as small business owners, is we open up what we call a sole proprietorship. Now, depending on the country you're in, this varies the conversation is a little bit different, but the overall of what I'm going to be explaining is the same. So sole proprietorship just means that's a standard business entry. Now, here in Canada, we have the option to run a business until it is $30,000 a year in revenue, which means that we don't have to register it. What that takes away from us is the ability to write off our taxes. So I tell everyone, at the very least, register your business. And I'm going to talk about the 3 types of business that we have here in Canada and the 4 types you have in the United States. So the first one is a sole proprietorship. That's a standard business registration. Now, what that does is that takes you and just allows you to run a business. And the marker's not very good. We also have partnerships, which allows you to run a business with another individual. Now, the problem with both of these is that each of them are taxed on your income as if you were an employee. So when you just have a standard business, and let's say you made $100,000 in your first year, or you're in a partnership and you do the same. Let's say $200,000 in this one, so you each get $100,000. So if you're utilizing this $100,000 here in a standard business, what you're actually doing is you're paying 40 to 50% in taxes. Now that breaks down to, in Canada, we have what we call an HST. So that's a sales tax. And this is a lot of states, and in the United States as well, you'll pay some sort of state or federal tax on most things that you purchase. So you're ended up paying 40 to 50%. And what that is that's your income tax plus your general sales tax. So here it's 13% in Canada and in Ontario. So that brings right over here doing the exact same thing. So if you're getting taxed an income tax and a personal tax on everything that you purchase, the only thing that we don't get sales or state or a federal tax on is generally our necessities, which is just strictly food. And that's only a small percentage. So just imagine that most of what you pay ends up paying out 13%. So if you have the 40% minusing off the 13%, you're paying about 27% in actual taxes per year for your personal income. This is built on the structure as if you had a job. So much like most of us wanted to become business owners because we wanted to leave the job market behind, we have to think like business owners. We have to stop getting taxed as if we are working so hard as we do as entrepreneurs, which generally we work harder than most people in a job. We want to be able to keep our money. We want to be able to hang on to that. Well, the great thing about incorporating, one very simple number you all should understand, is I can take, just by incorporating, this massive 40% here and turn it into anywhere from 15% to 25% and completely obliterating this tax here. Why? Because I can take everything that I utilize and everything that I purchase and put it underneath my incorporation. So let's talk about what that looks like a little bit. So just right then and there, you can understand the value of an incorporation. Not only that, as I mentioned earlier, it's also a separate entity. So it is not you. So if you're an individual and you own a business, I love my stick people, by the way. So you own a business and something happens within that business and you're looking at, maybe there was a problem with your taxes. Now the IRS or CRA may come after you. There was a bad business deal. You end up having to deal with it in court or anything like that. If you're a business owner, they come directly at you. However, if you're a corporation owner, they can only go after the corporation. Now, this is when things get really fun for me. And I love talking about this information because I'm really going to show you guys how the rich stay rich. And the main reason for that is that all of their assets that they have as a person, when they own one corporation, they keep all of their assets underneath them. So that way, if anything happens to the corporation, their wealth is sustained. And this is where it goes a little bit deeper. So obviously an incorporation is something that's a little bit more of a investment, but it is an investment in yourself. Here in Ontario, it costs us about $1,500 to set up a corporation. I can show somebody how to save that on their taxes within a couple of months. So really it is worth it to go down this route. Now the bigger way and how the actual rich do things is they open up a corporation. And what they also do is they open up what we call a subsidiary. Now, there's two portions to when a corporation owns another entity. So, and I'm actually going to take these rings off. They are honestly all for the look, not so much on the versatility. So, they end up opening up what we call a subsidiary. Now, there are divisions and there are subs, so subsidiaries. A division in itself is a business that is owned by the corporation. So just like I talked about sole proprietorships, this is a business owned by the corporation. A subsidiary is a corporation owned by your corporation. So if you understand that, this is how we work out things like protecting ourselves in different formats of how we do business and actually how to set up joint ventures, which I'm going to go into in just a second. So what we do is we open up our corporation here. This is what we own. This is our brand. So if you're somebody that delves into a personal brand, this is going to be where your personal brand, this is where you're going to start doing business. And from here, you build off things like divisions. And that allows you to open up other parts of who you are and what you do. So for myself, I'm a corporate strategist. I teach corporate credit and as well as how to deal with your assets, just like what you're hearing here, as well as I also do some private consulting on other areas and some coaching on the life side of things. So I actually have multiple divisions to my corporation. Each one takes an income, and that way I can structure my accounting very, very easily for my accountant in itself. So we build out our divisions there. Now, when we grow, we're going to want to do something very important. And this is where all the money gets saved in our corporations. We build out our subsidiary and we start building out divisions from here. Now, the reason, just like I talked about before, when it comes to why we actually create a corporation, it's to protect us, protect our assets, protect our income, protect anything that we have personally from anybody getting to it. So what we actually do is, this is the way the rich do it, is we build up a subsidiary underneath of our corporation. This stands as our brand. This now becomes our operating unit. So this is now where we do everything from. So whether or not it's building out the subsidiaries, we can build out other subsidiaries here. And we also create what we call partnerships, so joint ventures, which is what a lot of us are a part of. And that actually works out to just creating a partnership division, so a PD. And what that happens is somebody else that owns a corporation. Now, each of you are able to get into a joint venture, protecting yourselves because there's a corporation on each side. So no matter what happens within that joint venture, and it does happen where things go wrong in a partnership, it protects you, the individual here, from anybody ever getting back to your assets. So once we can structure a business like that, then we can really dive deep. And this is where the money really gets saved. I've already shown you how to almost obliterate your taxes by changing your income from a personal income into a capital gains or a revenue stream of profits from your business itself. So from here, what we do is we take that corporation and we start adding in assets. So we all have assets that we utilize for our business. We have phones, we have cars, we have houses, all of which can be owned by our corporation. And what happens when we do that is they become business entities. You've heard of corporate phones, you've heard of corporate cars, you've heard of corporate houses. From there, now you put these assets into your corporation. All those assets just became tax-free. All those assets just became corporate write-offs. So you actually get to write off the depreciation of a car. You can write off the depreciation of a house. And because you built this subsidiary down here, and this is where all your business is, you can now put your assets into the corporation, having it own them, saving tons of money, and being able to protect all of those assets from anybody ever being able to touch it. Because this legal entity here, the subsidiary, protects your incorporation from anything happening to it. IRS, CRA, civil court, anything like that. So when we're talking about assets, we're really going into, again, switching over your cell phone. If you have a $100 cell phone a month, and let's say for here, we have a 13% on the actual cell phone itself. That just got knocked off. So $13 a month times 12 months, $156. So you just saved $156 per year for the rest of the time that you own a cell phone. And that, to me, that's the cheapest thing that I have going on. I have other things like, my Zoom, obviously I pay for monthly, that's a write-off. Anything that I do online for my domains, my websites, all of that's a write-off for me because it's all paid out for my incorporation. So it's all liabilities and it's all expenses for my corporation. So when we put these assets in there and we're moving just $156, what we also have access to is corporate plans. So all of your cell phone companies have corporate plans, which you can utilize. So if you have a family, put all of the cell phones under the corporation. Now you just have corporate cell phones and you get corporate shared plans, which are all cheaper. So when it comes to just that alone, that's brilliant. Now imagine your car. You lease a car. Now you put it under your incorporation. You save on the taxes for that lease. You get corporate insurance for that car. And you get to write off the depreciation, the mileage, and the gas every single time you fill that car up. Now, something we can't do here in Canada is we can't write off our mileage, or we can only write off a very small percentage of it until that car is owned by the corporation. And actually, if you own your car outright, you can sell your car to your incorporation for $1. You can actually make up any amount that you want, but if it's anything above what the car is actually valued at, you get taxed on that. So I just tell somebody, you're already going to save a massive amount of money. Have your incorporation buy your already purchased vehicle for $1, and now you get to write off all of the stuff on that car, saving you thousands and thousands and thousands of dollars a year. On average, on just a small time lease that is only used, let's say 70% of the time, I can generally save someone about $2,000 a year on their vehicle, and that's before writing off the mileage, the depreciation, or the maintenance. So you're getting a lot back. You're getting a lot more bang for your buck, and you're getting to keep a lot of that money that you were going to pay out anyways. I'm all about keeping that money, and that's what these individuals do. So coming back to, talking about the new president of the United States, the current president of the United States, the reason he didn't want to share, and the reason that 90% of massive CEOs out there don't want to share their information, is because they don't want people to know these rules exist. Because nothing is ever split down to, the laws, the regulations, and the rules that we have here in Canada and the United States and around the world. They're not structured to just only fit a certain class of people, but sometimes only certain classes of people know about them. So when we're dealing with, thinking about the rich, they're just utilizing what's already there, what's already open and acceptable to utilize. We just don't know about it yet because we're all small business owners, and a lot of us don't think about the big picture. We're not thinking with the end in mind. So we need to be able to focus on the end so that we can structure ourselves as if we're already winners. I always say everything that we have, we already have. Our dreams, our desires, our aspirations, everything we already have. If we are dedicated to our goals and where we are and where our mission is going, we already have it. We're just waiting for time to catch up. The vibration, the alignment, everything is already there. So why don't we think with the end in mind? Why don't we plan for success? So many people are so worried about failure. Guess what? Failure is going to happen. Failure is an absolutely necessary part of your journey to success. You're going to fail over and over and over again, whether it's through yourself, your own limiting beliefs, your own self-sabotage, or something you can't control. You can't always control what's going to happen. What we can control is our reaction to things and how we're going to deliver and develop along the way. I develop with the end in mind. I already know I'm going to own billion-dollar businesses. I already know I'm going to be a great success. So why not plan for that? Why plan for the smallest minimal thing that we can? You know, there hasn't been a person that's wanted to be a lawyer, gone to be a lawyer and said, you know what, I'm just going to sit back. I'm just going to be a paralegal and let's see how that goes. They don't. Why? Because if they want to be a lawyer later, it's going to cost them more money. It's going to be more courses they need to take, more upgrades they're going to need, and more money they're going to need to spend. So you might as well go out of the gate knowing what you desire, going for it all the way, and grabbing your goals and taking them on. So this is the type of structure that those rich individuals, those top level CEOs utilize. Now, building out, and when I was talking about the assets themselves do something very, very important. There's something called corporate credit, which is something we all know about our personal credit, and even some of us are not that in depth on how it works, which is a really amazing thing that we should all know, is how to take a look and how to build our own personal credit. The great thing about corporate credit is that it's already starting at zero. The moment we open up an incorporation, our credit starts with nothing. So we get to start with a fresh slate. And realistically, for those who have already put a lot of damage to their credit, which can always be built back up, you now have the opportunity to access and leverage credit from your business in order to continuously get the products and services and credit that you always desired to have personally. Now you can do it through your business. Your business can build credit. Now, if you transfer something like a cell phone to your incorporation starts building credit. From there, you can build up. You can go to leasing cars. You can go to getting more leverage when it comes to loans, lines of credit, things like that that are going to help you grow your business. Debt is very, very powerful in a business when it's utilized properly. It can help us grow faster when we know how to access and leverage it, and we know how to take care of it properly. So we get the opportunity to start with a clean slate, like we did when we were back before we were 18 years old, when we all got our credit. And now we have the knowledge base to grow it properly within the corporation itself. So again, this is building out credit when you put this in. And because you already own a cell phone, transferring it to your incorporation is actually very easy. From there, we can start to look at things like corporate credit cards. We can look at things like corporate financing, things of that nature that are going to help us build even more and get us the leverage we need. And what's really important about a corporate credit card, and this is where I take anybody that I work with, and this is what we're building to. Because as soon as you can take a corporate credit card and you utilize that to make the payments on everything, and I mean, you can go down to grocery shopping, anything that you need for your business. It's just a simple swipe of that credit card. The need to keep receipts becomes less, and the dire need to keep those records becomes less, because everything you spend in your business is now in one place. You simply hand that over to your accountant and they can take care of the rest. Now, speaking of actually keeping your receipts, this is an awesome thing I want a lot of people to realize. Receipts have a shelf life. So I work with a lot of individuals where they're keeping their receipts. When you keep your receipts, they have a shelf life. The ink and the paper used in receipts gets damaged by sun over time. So a lot of people like to stick them in baggies, stick them in envelopes, hit them with anything that's clear. And what that does, that allows sunlight in and allows it to break down. You'll see after about 4 months, that receipt is no longer readable. That's very important that every month you keep your receipts, you keep them in something dark, in a dark place. And at the end of every month, I want you to get a scanner or take pictures with your phone, whatever you need to keep copies of those receipts. Because if you keep just the receipts, we're supposed to keep here in Canada our taxes for 7 years. So if you keep receipts and they don't last more than 4 months, if you ever have to go back into your records and look at them, you're going to find a bunch of blank pieces of white paper that are not going to be good at all. So every month, try and do your best to take copies of your receipts. And then just simply, as soon as that's done, you can pay your receipts all right, 100%. So all you have to do is just take those receipts at the end of the month and you can just recycle them back into the world and just keep the copies that you took. And at the end of the year, those will be great to utilize with your accountant. So that's just a small little thing I wanted to tag on there. And I really wanted to stop here today. And I want to open up to questions, because I know last time I did this, there were some really powerful questions that came out during the presentation. And I would love to, if Annie, if you could read me out any of the questions, just pick a few that are really exciting and that I can talk about for a bit here. and then I'll carry on. How's that sound?
Absolutely. So if you have a question, if you want to drop it into the chat on the side, I will be able to read it out. But Adam, the presentation is so amazing. Everyone has been so grateful to the information that you're giving, especially with regard to how you're able to help them set up the structure and how you've analyzed it here. It's really amazing information. You've got several people here, Fasana and Stephanie, who have acknowledged that you've been helping them set up their incorporation. So I think that's a message that that's helpful for everyone. So I have a question for you. If someone didn't know the first step of how to do this, they have an idea with the fact that they have a business, and they have no idea what is their next step in this. What's the first baby step after incorporating that they should do if they wanted to set up a subsidiary or a division?
Okay, so much like setting up an incorporation, so I'm going to backstep just a second to actually the beginning of setting up an incorporation. The first thing you want to do is you want to find yourself an expert, somebody in the financial industry. And even for myself, it's not something that I particularly do, but it's something I have a lot of access to amazing individuals that can take care of this. It's really important that this is something you don't try and do on your own, because once you do the final product and you actually put in the information for your incorporation, it stays like that forever. It never goes away. So what we have to do is get a professional to set it up. First, we pick the name. And now whether you are the United States, Canada, there are systems where you can actually search out the name. You get a check mark or a letter of or a message of approval that states that your name doesn't correspond with any other corporations that are within the country. So you start there picking the name. We process that through. Once we get the approval, then we get somebody that can do it for you. So you get a professional, generally accountants, investment managers, financial managers, anything like that. There's tons of them out there that can do this for you. And that's really where the fee comes in order to actually set it up. Now, after we set it up and we get the approval, which can happen anywhere between 48 hours and 2 weeks for most places, to get the approval to set up the incorporation, where we decide the directors, we decide, what the shares are going to look like, how the shares are going to be placed once, if it was to ever go public, or just keeping it private, because that needs to be split out, especially if you're doing a subsidiary or a corporation with individuals. So if you're doing that, then you would decide who gets what of the shares. If you're the owner, you get 51%, your partners get 49, etc. So you figure all that information out, and then you send it in and it gets approved. What happens after that, if we want to set up a division is actually very easy. It's like setting up a registered business, which you can actually do yourself. And all you do is you just indicate in there the owner of this business is your incorporation. And then they would just ask you to put in the incorporation information. So your business number, your corp number, which are two different things, and your taxation numbers, things like that, so that that division is now owned by your incorporation. Now, if we're talking subsidiary, we need to go back to the person that originally set up your incorporation, and we're going to do the exact same process again. That's going to create a new corporation whose lead shareholder or owner or CEO is actually your corporation. So I hope that answers your question for you.
Absolutely. And you're brilliant in this. And so I think you're going to have to tell this to me 10 times before it's going to stick in my head. But you do have some questions here. What if you have an existing corporation? Can these be utilized, or is it better to start from new if you wanted to?
Okay, so that's a really interesting question. So when it comes to actually, if you already have an incorporation, you can utilize it. Now, there's two types of incorporations out there. There's named and numbered. So whether or not, if you're just doing it something as, like I explained before, and you're just putting your corporation here, and then you're building out a subsidiary, you might as well just keep that corporation, because you can do doing business as whatever you want in that corporation. So if it's numbered, you can do a DBA that's doing business as, whatever you want it to be. Obviously checking to make sure that there's no complications with anybody else. But this one up here is really the one that is going to be your brand or your holding company for your assets. So if you already have one, you can utilize it for this very, very easily, and then just simply build out a subsidiary underneath of it. Now, corporations themselves, they never expire. The thing is, you want to make sure that each year you're filing online. Now, that doesn't necessarily mean taxes. Generally, especially here in Canada, we have to file once a year. It's a $12 fee We go online, we just basically punch in the information that says our business is still active, that I am still the major shareholder of it, and this is the address it's still at. So that's literally all you have to do once a year to keep it going. Now, taxes you want to do at least, you want to do them every year. Some people who have had corporations who haven't done their taxes because the corporation's been stagnant, you're going to have to backtrack. You're going to want to bring that up to date before you go to business utilizing it. So if you have, if you have it, you're going to want to get an accountant. That is somebody that is structured to work with the CRA specifically, and then you're going to backtrack and do the years that you haven't in taxes, bring them up to today, and then start utilizing that company. That's the safest bet to keep anything from coming back at you. So you can totally use a company that you've registered before, a corporation that you've registered before. You just want to make sure that you are caught up with your taxes and you're caught up with your filing online before you actually utilize it. But they never go away. They're there for life. You just want to make sure you're doing your taxes every 7 years to keep them active.
Right. Okay, perfect. And so there's another question, and this is from, so that one that you answered was for Samira. Our next question comes from Dean Park. His question is, for assists like cars, would you form a leasing company and put it in there and lease it to your corporation?
Now, are you talking, you'll have to give me a little bit of background on that question because that's a very wide question. So are you talking about a car that's currently financed and you want to lease that to your business? That you wouldn't be able to do. So actually, if you could just punch in the chat, just give me a bit more of an understanding of the question that you're asking, whether or not the car is financed or not, whether it's currently leased. Give me a little bit of background on that. Car not leased. Is the car financed currently?
No, car is not leased. Is it financed, Dean?
Nope, not financed at all.
Okay, perfect. So your best bet is to honestly just sell it to your corporation. So sell it to your corporation for $1, not try and set up any lease agreements or anything like that with the corporation. You're actually going to get a better benefit by putting it as ownership under the incorporation, because anything leased, if the corporation's paying you for that car, you're going to get taxes and income on that. Not only that, you're still not going to be able to write off as much as if it was owned by the corporation. So simply, it's a process that we'd have to go through. But literally what we're doing is we're just processing a form that states that I'm selling my car. I'm the majority shareholder of this corporation, and this purchaser is going to be the incorporation. It is purchasing it for $1. And after that gets transferred over, we transfer over the ownership, transfer over the insurance, and then it becomes an entity owned within your corporation.
All right.
Hopefully that answers.
Dean, did that answer your question?
It sure did. Thank you so much. Appreciate it.
My pleasure. My pleasure.
So the next question comes from Karen, and what she's done is she's already opened up a sole proprietorship. Is it too difficult to change it into an incorporation?
Unbelievable question, Karen. I'm so happy you asked this. All right. So to change a sole proprietorship into an incorporation is actually an accounting nightmare. Not only do you have to change your IDs around, you have to change all of your banking information. So transfer banking accounts, which anywhere halfway through the year is, again, an accountant nightmare. And all you're doing is just shifting that into an incorporation, which again, you're just going to be paying for the incorporation anyways. So the best way to actually do it is to open up your incorporation. And then what you're going to have to do, and again, we go through just a similar way as the car, we sell your current ownership to your corporation. Again, we can do that for just $1. And after that, now your corporation owns that division and we can utilize the taxation off of that. We would have to do it as personal up until the point that the incorporation purchased your business. And then from there, we would be able to put it into a corporate status and then get all of the benefits that I've been talking about. So open up a corporation, and then the same individual that helps you open up that corporation, or you and I can work together on it, we can put it under your incorporation as one of your divisions.
Did that answer your question, Karen?
It did. Thanks so much, Adam.
My pleasure. My pleasure.
So I guess for those of you who are tuned in right now, if you have further questions, just drop it into the chat line. And Obama has mentioned that he wanted to just say that this is exactly why he actually doesn't own anything, quote unquote, because he's got it under his corporation. So this is something that's applicable not just here in Canada, but as well as that in the US. So yes, Adam, we're so happy that you're not going to be able to leave us. We've got you as a permanent feature. We'll be able to find you.
Oh yeah, I bet. There's enough people on here. Vinny and Obama could find me anywhere. I believe that.
And so for those of you who are starting out, don't know where you want to take your business to online and how you want to do that, I think finding Adam on Facebook is the first step, setting up an appointment with him or just registering for his upcoming course, which he will be able to help you as well. So Adam, if you have some of that information about what course you're offering and where they can find information.
Absolutely. So I'm going to post that link right there because I'm not sure if anybody on here has it handy. So everyone, just do me a favor and just copy that link right there. And what this is this is a deep dive. So I'm going to be going into a lot more. I've really opened up today. I really wanted to give people a lot of value for what they're looking at when it comes to the course coming up. But I'm going to be doing a deeper dive and a lot of like one-on-one and breakout sessions with people because the strategies and what I'm putting up here, it's not all guaranteed. Every business is different. As much as I can maximize any business, the numbers that I'm putting up here are best results. Everybody has the opportunity to get those, but it really depends on the business that you run and what we can do with it. But most businesses are going to have the opportunity to utilize the max amount of what I'm showing here. I just don't make any promises to that at all on any level. So we can utilize these strategies, but again, they are going to differ for each one. So I really wanted to have breakout sessions during that or after that webinar with individuals to see the value in it when I do the deep dive and actually show people how to structure everything out properly and with a lot of information, because then I can work with individuals on a one-on-one basis and really be able to break down what their business is, how do we utilize it, where they are, what their structures are, what the past has been like, because all of those are determining factors to bring it up into the modern age and start playing as if you were already a billion-dollar business, because that's where I want all of your mindsets to be. I own a billion-dollar business. Let's start acting like it.
Oh gosh, okay, you're hired. I needed to do that Trump moment. And so you have a position in my company now. You're going to take care of all the corporate strategy and the financial aspects. You're going to deal with that because that's so I can go and do something else. Adam, you're brilliant. And it's so interesting that in 1 hour, you're packing it with so much information. There's so many steps here. I think if you had a way of people to, what if they're not here in Canada? Who or what should they do?
Absolutely. So if you're in the U.S. and a lot of other countries, because we're in a global world. A lot of the ways that everything works around the world is very similar. It will a little bit of difference in each country depending on where you are. But most first world countries or most countries with a strong economy to them will be doing business in a similar way. Why? It's so we can do business around the world. So a lot of the stuff I'm talking about can be utilized around the world. Now, specifically for the conversation that I'll be having, it really will be poised on the US and Canada, mainly because we are partners here and our systems are very much the same. And I want to go through how we can actually do business as a Canadian in the United States and as a US citizen in Canada as well, and how we can actually set that up as well. Because in the United States, you have something really amazing, which is called an LLC. So we don't have that here in Canada. We have something called an LLA, which is a very similar. So it's a limited liability corporation or a limited liability company, depending on who you ask. So that is a very strong factor in the United States. It means that you can have, so let's look at that just for a minute. So we have an LLC. What an LLC allows us to do is it allows us to have investors. And those investors pay into the corporation. Now, you are the CEO of that corporation, so you can run this. And the investors, because it's a limited liability, are protected from anything that can ever come back to them about putting their money into a business. Now, in Canada, in our LLA, these investors can have nothing to do with the company itself. They can have zero to do with running the company. But in the United States, there's a little bit more wiggle room there where they can actually have interactions with the company, but are still protected underneath the LLC agreement. So when you're in Canada and you want to do business in the United States, you have to build an LLC. So what ends up happening is you go to someone that's a lawyer that actually deals in this, and you basically make a one-time fee payment to that lawyer who will hold the record of your business in the United States as a United States citizen. The same thing here in Canada, only we have to own a larger, someone in Canada has to own a percentage of your business in order to do that. Down in the States, you just need the lawyer in order to hold the record of your company, and you pay them a one-time fee for that, and then you're allowed to do business in the United States. And the reason that's so important is because if you're doing business in the United States and you're getting paid in US dollars, you need to make sure that you're paying the IRS what they are owed, and you pay tax in Canada. But owning an LLC in the United States, you pay the IRS their chunk, no ifs, ands, or buts. But if you don't own an LLC and you're doing open business in the United States, it's not online, that's a bit of a different conversation. You're gonna wanna not have to pay tax in the US and Canada. So if you own an LLC in the States, you get a refund when you pay taxes in Canada for the amount that you spent in the United States on taxes. So you actually get it back from being taxed in the United States. We are taxed a lot more heavily here in Canada than they are in the United States when it comes to basically everything. So we're paying a small amount and we are getting that amount back, which is great. So you want to make sure that you are setting that up properly, because then when you get back into Canada, whatever you spent in taxes in the States is then refunded to you. So I hope that answers a little bit of clarity on the fact that I will be working with mainly Canadians in the United States, but I'm not going to be stopping there. I am going to be growing this outwards as more people get the information, and I do touch base with more people on a global level. I'm going to be teaching this in other countries, in other ways, and hopefully in other languages when I get those underneath my belt. So I believe Leo had a question.
Yeah.
Yes, I have. First of all, thank you so much, Adam. Amazing presentation, very powerful content. And here's my question. I have two opportunities to work abroad, South America, and I receive dollars and other kinds of currencies. But it's not. I have my mind in the end, as you taught us. However, I'm not planning to open a corporation outside there. So this content that you're teaching and these principles can help me out here in South America, the companies that I have here.
Are you, sorry, what's your actual nationality? Like, where are you from?
I am from Brazil.
Okay, so are you living in Brazil now and doing business in other parts of South America?
Exactly, Argentina and Chile especially, and I have and I work with other countries as well, but mainly in those countries.
Okay, it will really depend, and when it comes to South America, I'm not as poised as I would desire to be when it comes to the laws and regulations. As I said, I'm really sticking to North America for the time being, but it will depend on how they want to tax you. So if you're doing like a business online, it's a lot more of wiggle room, if you will. And a lot less stipulations on how we get charged taxes when it comes to working in another country. So it either will be that the country is fine with you doing business there and collecting dollars and taking it back to your country, and it can be perfectly fine for that, or they want you to pay taxes in their country for the business that you do there to make sure they're getting back. My personal desire when it comes to how I grow my business will be that in each country that I do business in, I will own a corporation, an international corporation in those countries by abiding to their laws and their rules. Again, just keeping the end in mind and wanting to maximize as much as I can. I want to make sure I'm doing everything right for the countries that I'm working in. So each country is going to be different. Again, working out of the United States, if I'm doing business there and I don't own a corporation there, then I get taxed by the IRS for business that I do in the States, and I get taxed in Canada. Only when I own a business in the United States do I get that tax from the United States back here in Canada, right? So it's just an agreement that they have. Each country will be different, but I highly suggest if you are paying taxes in both countries, your best bet is to own a business there and run it as one of your separate subsidiaries. And then that way you can maximize on the benefits of each individual country, especially when it comes to countries that are going to charge you less tax than your home country is. So the taxes that I get charged in the United States are significantly less than what I get in Canada. So that's why I love doing business in the US. And I get a lot more of my revenue back by doing it that way. So I'd really look into the laws and regulations in each country to be specific and really find out what is going to be the best option for you, where you're going to get taxed the least, and what is going to make that governmental agency that deals with the finance and taxes in that country the happiest, because you want those guys on your side.
Beautiful. The answer, yes, you can help me out with some stuff here. So I appreciate that. Can I make another question, Annie?
Yes,
Of course.
absolutely, Leo.
Beautiful. Thank you. This question is a kind of Debbie's, my friend Debbie's, which is here question, which is, I really connected with Robert Kiyosaki principles that I build my companies here, and Tom Wright, if I don't mistake his name, which is the Red Daddy's advisor around taxes to here. So I follow his steps. So the question for you is that a type of your mentors? You follow same the line of them, or do you have another mentors or another materials? The reason that I'm asking this is because I want to study that, because this is a huge challenge in all my business today.
Okay, so I have followed a number of individuals. I follow people that are really open about talking about this, less than I do people who aren't talking about what I'm discussing today. Because a lot of the stuff that I found isn't open information that you can just gather anywhere. Not a lot of people are talking about how to actually structure the businesses the way that I do, and the way that the rich of the rich do. So for the most part, I actually look to the individuals that aren't talking about something but have reached success and studying them more than I do individuals that are talking about it, because I find what's being discussed in open conversation and open information isn't necessarily maximizing the potential to what we want to accomplish, right? The rich don't want this information out there. And as soon as you reach a certain level, there seems to be a disconnect from when you're up here looking at the people below and being like, I don't want to share this information because I want to keep money to myself. So there seems to be a disconnect somewhere when somebody reaches a certain level that they're no longer talking about this information in the transparency that they should be. So to answer that question, I do follow everybody that talks about it. I've seen some of Robert Kiyosaki's work and a number of other individuals that talk about, taxes and finance. Taxes and finance. So what I want to be able to do is just really look at the individuals that are being secretive, who have amassed massive success. And I'm talking like, I want billions of dollars plus, 10 billion, 100 billion, those businesses, and really focusing in on those CEOs. I'm not really concerned with the individuals who have not hit that level, because if you're not on the level that I want to be at, I'm not going to follow you. I'm following the individuals that are already billionaire status and higher, because that's where I want to be. So when it comes to the conversation at hand, if you're not talking about it, I'm more interested in it than if you are talking about it.
Appreciate it. Thank you so much, Adam. Awesome.
Thank you. Amazing questions, by the way.
So I have a question for you, Adam. If we're going to move into investments, if someone wanted to decide between mutual funds and a tax-free savings account, or another form of investment such as property, what would be your ideal form of being able to invest here in Canada?
Okay, so really awesome question. So a TFSA is great for you personally, right? Tax-free savings account personally. So let's say we take this corporation and we've put all our assets in it, right? Now, what I've just done, and I really want to put this into everybody, what I've done by putting my assets in here is I've removed my expenses. So take, for example, you are an individual, and again, coming back to Donald Trump at this point, why he didn't want his taxes? Because he doesn't pay taxes. Why? Because nobody wants to see, he doesn't want to put out his tax report that says, I only pulled $50,000 in revenue or in income last year. Why? Because I only needed 50 grand because all my other expenses were taken care of by my corporation. I just needed some play money. So he's only paying taxes on that small amount. So here in Canada, we have TSFA, so it's tax-free savings account. And what that allows us to do is the tax-free savings account will save us a certain dollar value that doesn't need to be charged a year, and that can be compounding. So what we actually want to do is take the money that you're getting from your business. So let's just say you need some pocket cash and you're going to put it right into that TFSA. That's going to save you more on taxes. Now, when it comes to investing, when it comes to like, you mentioned mutual funds, right?
Yeah.
So mutual funds are great. They are secure. They're very low level though. Like we're only seeing between maybe 3 to maxing out, and I mean maxing out at 8% yearly for mutual funds right now, unless you know somebody amazing. Most investments right now, you want to be doing privately, especially when you're doing it with your business. Anything to do with your business, what you're getting is called capital gains tax. So when you're actually making an investment each year, you're going to get what they call a capital gains tax. So the standard across Canada and in much of the States is about 15% that you'll get taxed on that. Again, if you bring that in as a personal income, you're going to get taxes if it's an income. So you're going to want to keep those under your corporation as well. Any investments that you put out there, you want to keep that under your incorporation as well. Taking, again, if you made $100,000 this year on investments, you would get taxed 40% on that as if it was your own income, or 15% as a capital gains within your business. So again, mutual funds, they're secure. They're not my favorite thing. They're not something I put a lot of money into. I do like here in Canada, we have RRSPs or 401k in the United States. When you put money into that, you can actually get money back from the government, which works out in really interesting ways. Sorry, I was going to go down a road there, but I actually, for anybody that owns a charity as well, I actually have a full structure for this, which is really exciting when it comes to a charity. I actually show them how to make money on your money when you own a charity. So anybody that has that, that's also going to be another reason you're going to want to be on the webinar, because I'm going to be having that conversation as well on how to make money out of your charity and keeping the money within the charity, but how to maximize by continuing to put money into that charity and what you can get back from the government and the kickbacks that you get back as a corporation as well. Massive, massive, massive conversation that I'm really excited to have with you all as well. So I hope that answers your question there on where to put your money. Once you do take it out of your incorporation, tax-free savings account all the way, anything that saves you taxes is amazing. Investment-wise, keep your investments within your incorporation. You'll be taxed less.
Wow, that's fantastic information, Adam. I can't wait to learn more from you. You're our wealth of knowledge. So thank you so much. And that's coming to really the end of our session. And before we close out, I actually want to bring on our person who's going to be speaking next, and that's going to be Peter Young. Peter, are you still on the call? Peter,
sorry, I had to unmute my thing. I'm not very tech savvy.
Well, I'd like to introduce Peter to this group, and I just got introduced to him, but he's already wowed us in his first couple of conversations. And through those conversations, we realized that there's a lot. So I want to say thank you to Adam for his presentation, and that if you were tuned in today, you'll have an opportunity to review this recording, but also you'll have an opportunity to reach out to Adam and get in touch with him. But we have another powerhouse session that's going to happen tomorrow. And in front of us right now is Peter. And I want him to just introduce himself very briefly and what he's going to be discussing tomorrow.
First of all, this hour, thank you, Adam. Holy moly, the value that I got from this, it already made up the investment that we all put in. So holy, if I may say shit, this is amazing stuff that you put up there. So, you know what, like it really inspired me to just kind of talk a little bit more about Asira because of this, because the fact that I get to be around all of you people and just kind of soak in the energy and, you know, the knowledge that I get from you guys that I haven't really went through. I mean, this is a community that I think that a lot of corporations are missing. Well, actually not missing out on, but like the people who work for companies, we work for corporations because we get to be around a group of environment, like a group of people, and we get to be mentored. But in this kind of setting, when you're an entrepreneur, it's kind of lonely because you're trying to grow your business, and like Adam said earlier in the chat, you know where your future is going. It's just a matter of time to get there, and that's the most unfortunate part. You can't really control time. But yeah, so I mean, I'm really blessed to be here, and I really hope that I can share the value that on my side of expertise. So
Brilliant.
Adam blew me away, and my side of expertise is, so tomorrow I'm going to be talking about the 4 stages of ultimate health. Okay, so when it comes to the 4 stages of ultimate health, I'm not just talking about physical health. We're talking about awareness in general, because we can read all the textbooks you want, but at the end of the day, if you're feeling pain and you go to the doctor and they say, oh, you're just thinking it, you're just overthinking it, well, you're still losing sleep, you're still afraid of the future, and your body's still going through those anxiety emotional chemicals, right? So basically my presentation tomorrow is just to give you guys a little step into what awareness is of your body. So your mind body soul connection, how you think, how you act, how you feel, which in turn is your mental, emotional, and physical health, which is essentially everything that we need to breathe, everything that allows us to get out of bed, everything that allows us to get excited and channel those emotions that we could throw into our business. And that way we can, channel this energy and support the community that we're trying to serve. So I think we all have to be selfish, and we got to look at ourselves first before we try to be those leaders. Because at the end of the day, first impressions do count. So me as a personal trainer, if I don't look like I'm in shape, I don't look like I'm young, then why is anybody going to want to follow through with my services? Is because I'm not even walking the talk. I'm just selling. I might be a great salesperson, but I'm not here to sell anybody. I'm here to demonstrate value. And hey, if you want to hop on board, then let's do this, right? So I think every single person in this chat is all about that, which I'm really blessed to be here again. So everybody on this call, please invite as many people as you can to the 1 o'clock call tomorrow, because I am here to change lives. I'm here to open your awareness. And you know what? For the first few nights after my call, I'm expecting you to lose sleep, because you're going to be thinking about all of the things in your life. And my goal is to, my goal is to make sure that whatever I deliver in this call tomorrow, or at some point in the future, if you end up working with me, by having more awareness of your health and by having more awareness of your energy and how to recover from that, it's going to add 10 times value to your business and grow your bottom line and increase your productivity, because you're not worried about your health and your body and all your frustrations. So thank you so much for the intro, Annie. I'm excited to talk tomorrow. I'm just finishing up my presentation now. But I learned a lot that I have to concise it to 30 minutes so that I have 30 minutes of answering questions, just like what Adam did. So I'm
Wonderful.
really happy I'm here.
Thank you. I'm going to invite Dr. Obam to come back on, and he's going to just close us out.
Awesome. So thank you so much, Annie. Thank you, Peter. And I won't say thank you, Adam. I'm just going to say bad ass job. Kick ass, just like the monster you are. So congratulations.